Afternoon, everyone. It's Dr. K coming at you, and Phil Morales as well on this bright, beautiful, sunny day, at least in the northern hemisphere. We've got a market that has been baby stepping higher in this uptrend that has sent the major averages to new highs, all-time highs or multi-year highs in the case of the NASDAQ. And we also see that the leading stocks, some of the leading stocks had been breaking to new highs. We've reported on a number of these names like Amazon and Google, and some of the biotechs that had a bit of a difficulty in June, and then they're coming back around the right-hand side of the base, such as Regeneron, that's REGN, Biogen, BIIB as well. That looks like it's going to probably trigger another pocket pivot in today's trade. We reported on its pocket pivot on the 12th of this month, and actually also on the 11th. Both of those days were valid pocket pivots. The stock's trading above its 50-day, so it looks like it's acting as it should. As far as the earnings season, last season was a bit weak, and it looks like this season is also coming in a bit weak. A number of names got clocked yesterday as they reported earnings. Stocks such as eBay, Intel, Google, Microsoft, all these big tech names, some of them leading names, were clocked by reporting earnings that didn't meet the satisfaction of investors. But nevertheless, quantitative easing is alive and well, and it has been pushing the markets higher. If you look at the S&P 500, the steepness of its uptrends seem to be on par with prior uptrends that were motivated by quantitative easing. And we can see that in 2009, 2010 to 2011, the slope of the ascent, in other words, the speed at which the index is moving higher when it's trending, seems to be equivalent for all three QEs at this stage. So the question is, will this current quantitative easing continue to behave like its former brethren, or will the market tire of quantitative easing? The question is also that the economies around the world don't seem to be picking up as they should. So it's a question of whether the Federal Reserve banks around the world are digging a deeper and deeper hole for themselves. We believe so, simply because you can't create wealth out of thin air, and there is a steep price to pay for all this artificial boosting of stocks. I mean, obviously, some of the prices to pay are the devaluation of currencies, the wiping out of the middle class over time. We've seen this happen in smaller countries that overinflated their currency, rather overinflated their money supply, so depreciated their currency. And I guess it remains to be seen what the market will deliver up next. But right now we're in an uptrend, and so that's what we're going to stay on. The market direction model and the UVXY volatility, the VIX model, are both on their respective buy and sell signals until the current trend is to end. And that's all I got for today, for now anyway. Gil?
Yeah, just want to let everyone know I'm a little bit under the weather today, so bear with me. I'm kind of kicking back in my chair a little further from my microphone than I might be otherwise. But for those of you who are on the chat room this morning, I thought you could step in and buy some of these stocks as they're pulling in. The action's still a little bit shaky, but I think the market needs to work through this sell-off, which really seems to be focused in the NASDAQ, which has actually been the stronger of the two indexes. If you look at the S&P here, you had the big move up, and it's just barely eking out to new highs, whereas the NASDAQ gapped up. And the last time the NASDAQ gapped up, and I think this might be significant, is you saw this gap up here, and everybody started to think the market was getting a little bit extended and tired. And what happened is it went up for 12 more days, and so here we have the same situation. We get a gap down today based on some big NASDAQ stocks getting hit on earnings. But if you look at Google, this happened yesterday after the close, eBay announced the day before on I believe Wednesday after the close, and it got caught. So you see that, but it's breaking down. I think eBay is a weak sister here. Google, though, look, it's finding support, and on this chart I have a 65-day exponential, and I would encourage you to put one on your daily charts, because what I'm seeing here is a lot of stocks in this market. There's a little bit more of a volatility parameter here, and I've been telling you guys that instead of the 10-day, I'm looking at a 20-day. Instead of a 50-day, I'm looking at a 65-day. And you can see Google, it did come off yesterday. That might have been your clue that something wasn't all right with earnings, but it held the 20-day initially. Now we're coming down, we're holding the 65-day, and you're near the peak of the day so far. So if you bought down there at 872 off the opening, you're making a good 25, 27 points right now on the upside. So I think in a lot of these cases, you're seeing stocks get hit, but money just comes in and buys them. And our chat room this morning, we were talking about LinkedIn. It was one stock I was moving into, coming in off, say, the 199, 198 area, which was the low, I think 198.25. And just come in and buy a little, and well, I didn't really buy a little, as those of you who are in the chat room know. But you come in around 199, and I think your risk is pretty minimal. Generally, what I'm looking for on a morning like today are stocks that are getting hacked, but which were strong yesterday. So, LinkedIn was strong, and it's getting gapped down, and it's actually holding this little breakout here. It's a cup breakout. There is no real handle. You did have a pocket pivot here, retest the 10-day moving average, and pulls in here. It's possible it could pull a little further to the 10-day moving average, but I think that's going to be dependent on whether the market comes off more. And I think really what you're seeing now is, NASDAQ gaps down, it's holding so far, but the S&P is really acting like not much is going on, and Dow's the same thing here. So, they look, to me, it looks okay. It looks normal given the steep rise and the pullback. And the other thing that I think is a vote in favor of the market uptrend is the fact that you are seeing, look at this, Chipotle Mexican Grill viable gap up there, bada bing, bada boom, there you go. So you got that going on. This YY, I don't know what to think of this thing. It made this little cup and handle thing. It's a little steeper on other charts if you're using, say, a Market Smith or something, so more like that. That looks steep, but look at this thing take off, and it's just moving higher. So you've got strong names. Kihu had a sharp pullback, but you're going to new highs. This Pharmacyclics, pulled back, but you're breaking the new highs. Biogen looking ugly this morning and reverses off the 50-day moving average, and maybe headed to a pocket pivot reversal. The thing here is, if you buy a name like this, do you want to own it into earnings? And that becomes a big question. And I think in general, my approach would be to not have more than a 10 or, if I'm feeling really confident, maybe a 20% position in the stock going into earnings. And you could think about this. Maybe the pocket pivots start giving you some clues that these things are okay. Celgene yesterday got tagged down to the 10-day moving average, and it's a little bit shaky, but there's some news about Revlimid. They're discontinuing some trial for it. I don't know, but that's what biotechs are all about. You can wake up one day and the things are down a decent amount, and then you have to figure out what to do with them. My vote on Celgene is I'm just going to stay out going into earnings for the most part. I think that the most interesting stock here, let's see, what else is getting whacked in? Let me just look at Microsoft. I got to tell you guys, when I go on Fox Business News and they ask me to comment on stocks that I really could care less about, I hate that because I always end up being wrong. If you look at Microsoft, it looked okay on the breakout, but now it's getting pummeled. I probably should have told them Microsoft is a piece of garbage. But when you do that, Stuart, as we call him on the chat room, that's spelled S-T-O-O apostrophe O-T, and he'll get all miffed because he still owns Microsoft. And it was looking like it was going somewhere, but let's face it, Microsoft is a piece of junk, and you don't really want to be owning that stock, even if it does break out. The other one they asked me about was Yahoo, which I don't know, just makes me think of that drink, which actually okay, and that one I didn't like, but it broke out. Amazon's acting fine. That thing broke out right to the 10-day moving average. Probably is Bible on the pullback to the 10-day, but of course, you're going to have to deal with earnings coming out. So, other stocks, this Yelp thing is quite amazing to me. You had a breakout here. not quite a pocket pivot here, but it's just going higher, and it really didn't pay attention to what the market was doing this morning. Gilead's another biotech moving higher. Some of the builders are trying to round out what look like maybe the lows of bases, but I'm not satisfied that the evidence is there yet, so I'm not really interested in those right now. Silica Holdings, we saw that stock issue a pocket pivot yesterday. I've been watching this for a long, long time. And I think at the base, you've got some supporting weeks here and in here, and I think the base looks okay, and it's trying to round out. So I think the key is going to be what they do on earnings, and so we'll just have to see how that one pans out for those of you who are asking it. But it looks okay. I noticed that the BCEI, Bonanza Creek, has moved up to the highs of its base, and it's trying to form a little handle in here, but they come out with earnings, I don't know, a couple of weeks or so. But that's all coming up. You're seeing somebody asking about Coors. Coors got hammered. I'm not really interested in Coors here. Maybe you could try and buy it off the 50-day and then pray that they come out with a good earnings announcement in the middle of August. Ambarella, pocket pivots. This stock I have trouble with because it has a strong move and then it just comes right back in. So it just kind of seems to be just choppy and sloppy, and it's a thinner stock, so it's not something I'm terribly interested in. Vertex, that's why you have a breakout here, I think. It was a pocket pivot breakout. It was not huge volume. Again, a biotech going into earnings, you got to decide what you really want to do here and whether you think you need to own the stock. Triple D, I think these stocks are acting a little weak here, but notice Triple D is right at the 50-day moving average. Maybe it's a buy right here. Maybe it's going to bounce off the 50-day moving average and go higher. Maybe you could test it out here. SSYS bothers me just by the fact that you see these big volume spikes. They occur off the peak, and then the stock just gets knocked around. It's real volatile, so it's a hard stock to deal with. So I'm not sure I'm really into those. Overstock is viable gap up, and here it comes back in. So I guess if you like this, you use the low of 31.62. It's about a buck and a half away, a little more than that from here as it pulls in. So maybe you could buy it. I'm not really a fan of a stock like Overstock, mainly because it's way too thin. Trading 500,000 shares now, but it just seems way, way too thin for me. Let's moving down my list. Illumina, I don't know what the heck. You know what happened the other day, Dr. K? Was there some weird news on this puppy? Kind of spun out, and now it's just kind of hanging on the 10-day moving average.
See, that was the 12th. Have a quick look here. Okay, the 12th had there was some takeover talk. So yeah, Alexion Pharma jumped on Roche takeover talk, and that made Illumina fall.
Okay, so a little crazy, and I guess it went up and down, but it's acting okay.
Since they're direct competitors, so.
Yeah, Actus One, this Actavis, we were talking about it in the chat room. It's going sideways, but I'm not sure, what I think of this thing right now. It seems to just be going sideways, and it's going to need some catalysts to drive it higher. But right now, I'm not really picking up anything in here that tells me I want to deal with it. Someone's saying Alexion caused the move in.
Yeah, it was a takeover talk.
Yeah, but that had something to do with Illumina too. I don't know. Not sure what that's about. But anyways, that's the story on that one. Tesla, I think, is very interesting because what happened here is you pulled down and you found support at the 10-week line. So, it's your first pullback to the 10-week line since the stock got moving. And so I guess that would be viable if you got the cojones to do that. And you can see here on the daily chart, you got some pretty good volume. I generally get very nervous when I see something break on that kind of volume. But notice it's holding right along the 10-day line. The lows here are like 116, 117, I think, 116 and change. And maybe it's going to try to go back above the 10-day moving average. The trick here might be that when it broke, the shorts have been wanting to swarm this thing for a long time, and they want to come after it every time they see it come down, and they just want to bust in and take the stock down. And somehow, I think a lot of people have convinced themselves that this thing is just so wildly overvalued that it just, by all rights, has no business being up here where it's at right now, and it needs to come down to 60 points. You know, Goldman Sachs caused this break the other day, and that was essentially because they raised their price target from $60 to $84. But let's think about this for a second. If Goldman Sachs thought that Tesla was worth 60, the whole time that the thing had to move from what, 45 to 130 something. What was the high over here? Let me check this real quick. 133.25. They don't know what they're talking about. So, you know, they're just doing what Goldman does best, which is just spew bullshit, pardon my French, probably to help out their clients. Maybe they had a bunch of hedge fund clients who were short the stock, and they got to come out with this knock it down and help them cover, you know. Now, that's all to say that you can speculate about this, and I don't trust Goldman, you know, Goldman with sacks of gold, as we used to derisively call them when I was at O'Neill. But I don't trust them as far as I can throw them, so you never know what their motives are. You know, they come out, their best case scenario means the stock's worth, what, 115? It's like, okay, whatever. But it's clear to me that whatever their valuation analysis has been based on their prior $60 target, they really don't know what they're talking about. On the other hand, when you see a stock break like that, you don't know how far it's going to the downside. So, you know, I was long the stock, and I felt, you know, whatever I had left at this point, breaking the 10-day, I'm just going to be out right there real quickly. Because if you were looking for a 10-day violation, okay, and I think the stock has obeyed the 10-day. Here you close below, but you never go below that. Here you close below, but you never go below that. I think if you obey the 10-day, you would have been selling probably down here, maybe in a panic. But I'm going to tell you, when you see this sort of thing happen, refer to your weekly chart. And if you were late selling on the break of the 10-day, then take a look and see if it's coming down into the 10-week, because that may be where it finds support. Notice it's above the 50-day, but it comes right to the 10-week moving average, and it finds some support right there. Yeah, so now it's trying to stabilize. Now the trick here may be that because the shorts have wanted to swarm this thing every time it comes in, you may be getting more shorts in the stock, and all this is going to end up doing, maybe on earnings, maybe before, but, you know, maybe it sets up a short squeeze because the thing doesn't want to break down, and all these, maybe you have a bunch of trapped shorts who came in just thinking that, you know, rubbing their hands together and salivating and thinking, oh boy, this thing is done finally, and I'm going to get my revenge because I'm an idiot who's been trying to short it all the way up. And that may be, you know, what's going on. And so, you know, checking the last month's or the most recent short interest report, I believe at the end of July you were looking at almost 20 million shares short. I know at the peak they had 32 million shares short. And so, you know, you really haven't covered that much of the short interest. And for all we know, this latest break brought in a lot more short interest. Now, I did notice, I was just testing out the stock when it was coming down to see if it was borrowable, and it wasn't borrowable, which maybe tells you that the whole world maybe still is short the thing. And so, you know, it's trying to hold under the 10-day. Maybe it just goes sideways and then it tries to move higher. If you're an aggressive player, I think you might try and buy some shares, but use a quick stop maybe at these lows, or here's the 20-day moving average, which you'll notice is now holding, even though it can't get it above the 10-day. But as it goes sideways here, it sets up the potential for a pocket pivot over the next several days. I don't know if that's going to occur before earnings, or maybe it happens after earnings. I don't know, but it's a little bit tricky. If you were able to pick it off nimbly off the 10-week line, then I think you're okay for now, and you just wait and see what happens. You know, but don't stick your neck out too far. And if you're not an aggressive player, Dr. K, you wanted to say something?
Yeah, what's interesting about this one is you have the viable gap up in early May, and then on June 24th, you could say that technically the June 24th is a violation of the 10-day within 7 weeks. So
right.
You would then switch to the 50-day as your selling guide.
Right.
And alternatively, you could say that on the 21st of June, it closed just under its 10-day, and so you might fudge and say, well, it closed on it's close enough to its 10-day, so the next day is not a 10-day violation. But you know, this is a gray area, and it requires some judgment call. I mean, personally, this is clearly the leading stock of the market, so it's entitled to some volatility, and I would favor utilizing, therefore, the 50-day moving average instead of the 10-day, and you know, calling the 24th of June a 10-day violation.
Okay, I like that. But you know, I think you just stay fluid with the stock. Like I said, when I see it break like that, if it's been a strong stock and the volume's heavy, I'll just get out pretty quickly. And I'm kind of in a position now to decide if I want to come back into the stock in here and maybe take a small position going into earnings. So, anyways, FLT, it's holding. FleetCor, you know, earnings coming up. It's had a long run. You had some breaks here. I think there's a group sort of downgrade here where they put a neutral weight on a number of these stocks that are related, but I think FLT has still got strong fundamentals and is still hanging in there in terms of earnings growth. And I think the next quarter, which they're announcing, I believe on August 8th or 7th, they're looking for a 30% increase, which is decelerating. But I think the stock's trying to hold the 10-day and the 50-day, so you're just watching for a pocket pivot, which has not occurred yet. So, LifeLock. It's in a cup and handle. I mean, it looks okay, but I don't see any buy points in here. So I use this service myself, and it seems to work pretty well. But you really can't tell anything right now. But it's an interesting name. What is that, Dr. K?
I think that's a gasket blown.
Uh-oh. Uh-oh. Are you in London right now, or have you headed off to Turkey yet?
No, not yet.
Okay, all right.
I could say I'm on my spaceship, and you know, that was one of the concealer chambers.
Little course adjustment there. Okay. Gigamon. You know, I love the stock mainly because it's 1L short of Gilmo, which is my handle on the chat room. And you know, stock's coming in, volume is drying up. So you had this pocket pivot breakout. And remember, this is one of the great things about, boy, what's going on over there, Dr. K? You're getting a little bit carried away. Smashing things
the warp 9 didn't quite work. We're going to have to reduce the level.
Okay. Anyways, Gigamon had this pocket pivot breakout. And you know, this is where pocket pivots are useful in handling IPOs because usually they don't have a 50-day moving average of volume, so you can't really tell if the volume is sufficient for a breakout. And if you use a pocket pivot instead off the 10-day, then you're good to go. Now, you had to be buying this, I think, soon after the pocket pivot. I did actually buy a little up here, but sold it up in here. And now it's doing what I thought it would do, which is pull back. And you notice it's trying to hold the 20-day moving average right underneath it. This is a thin, squirrely stock, okay? But I would think if you bought it in here, it's got to hold the 28 level. So that's what I'd be looking for. Let's see. Any more questions people have here? Let's go through some more of the stocks that I've been looking at today. Yandex has been strong, pulls into the 10-day moving average and holding up. You know, so here's another one. This Workday, it had a pocket pivot. It's another squirrely stock. I guess you could have bought it on the pullback to the 10-day moving average. What are you guys all doing? Buying Tesla? It's starting to move. But I think, where did you go? I think, you know, it looks okay. It's just a squirrely stock if you can deal with it. You're forming a cup here, not terribly negative here. I mean, it looks pretty good. It looks decent. So it's acting okay. Let me ask if Dr. K is having blender problems. That may be the case here. Perion Networks, pulling back to the 65-day moving average, you might notice here. You know, this is a thin stock. It trades, what, 150 or something like that. So it's not really one that I deal with. So, you know, I have to say that doesn't really hit my radar screen. You had a nice sort of pocket pivot here off the lows, but you're under the 50-day, and so it's just farting around right now. Somebody says they asked, there has been good action in pre and after hours markets. Any advice for participating in these markets? Unless you have an institutional level platform, I don't really see why anybody needs to mess around after hours. The markets tend to be thin unless you're dealing with something really thick like an Apple or a Google. So, Dr. K, did you drink any of those 1K bottles of wine?
Not yet. There's going to be some reason for celebration in the future, and we're going to have to crack one of those open.
Okay. I hope I'm there when that happens. Let's see. Lion
In the meantime,
Basil.
my intergalactic blender works just fine, as you heard, and it's making up these Martian martinis quite steady.
Very nice. Lyondell Basel, chemical name, it's acting okay, but it's just pulling back. Nothing really definitive here. I don't really see any big buy points in this stock. Maybe when it broke out, but it's pretty slow, so it's not really one I've been favoring here. THRM, what is that? Probably the Gentherm. There we go. What is it? That's a thin biotech, is it not? Let me see. Yeah, it trades like 100,000 shares a day, something like that. It's pretty minimal. But it's trying to break out. I guess, did you have a pocket pivot breakout? I guess you had a pocket pivot yesterday. This is a pocket pivot, I think, because you're 1, 2, 3, 4. Yeah, that's enough for a pocket pivot yesterday. So if you like it, there's your pocket pivot buy point. But you know what? These guys actually make money, and it's not a biotech. It is auto truck, original equipment company, and I guess they're doing okay. Nothing spectacular, but some of these steady eddies have done pretty well. We've seen United Rentals having a pocket pivot up to the 50-day on Wednesday, and now it's kind of running up to the top of the base. You got some overhead here, and it's trying to pull back. VIPS, I think VIPS is a great call on the pocket pivot the other day. It was right here. We put that out, and it held steady the next day, and then it's jacking to the highs. So there's nothing wrong there. That's acting just fine. Really nothing to worry about if you bought it close to the 50-day moving average, somewhere around, I'm going to say around 33 maybe on this day, or either one of these days you're looking okay. I would think that on any pullback from here you would hold the 34 level, because this is a kind of a narrow double bottom, and the top of the double bottom is 34, so I think you'd want to see it hold those levels. So Halliburton, HAL. This is why I'm noticing some oil stocks are acting better. And I always remember 1996, I think it was 97, when you had oil stocks moving, they caught everybody by surprise. I made a lot of money in a stock, UTI Energy. It's a tiny little stock. It went from like 16 to 80. And the oils, there are a number of other ones I think that did pretty well. And you're seeing this again. So you got Halliburton oil service stock is breaking out, and you look at the pattern, you get sort of a base-on-base formation. And I think this also, bolsters the argument for Bonanza Creek. I think Halliburton does some. They're like one of the biggest customers of High Crush Partners, which is another fracking sand supplier. And so. That's another player, and of course we saw a pocket pivot in Silica Holdings. This thing's been a sleeper for a long time, but I think it's okay. And if you can sit with it, I think it's probably going to head higher. And I'm okay. I would be okay holding a 10% position into earnings there. But you are seeing, I think, some of the other oils, the OII, Oceaneering, kind of breakout, and it's holding tight along the 10-day moving average. And now you just watch and see if you get a pocket pivot. Notice how this is just base gone higher, base gone higher, base gone higher. And they're working, so you can't really fault these oil stocks. They're doing okay. Does anybody have any others that they've been watching? I'd like to see what the group has to say. Some chatter about HAL as possible takeover by GE for energy. Wow, look at all these. Suddenly we get a bunch of IMs here. Let me just go down the line here before I get to some of these other oil stocks. Past 2 weeks, what did Bernanke say? What does it mean? Thoughts on Detroit bankruptcy? Is LA next? Wouldn't surprise me. I mean, the only good thing is Garcetti was elected mayor. Of course, I'm in LA, and Garcetti is not beholden to the unions, so that might be a positive for LA. Who knows? We'll see what happens. But Detroit going bankrupt, sign of the times. What does that mean? Just more liquidity being flooded into the system. So, stock investors are probably going to be happy, but your average Joe on the street is probably not going to be happy. So someone's saying there's chatter about HAL being taken over by GE for energy play by GE, I guess. So maybe that tells you that GE is recognizing that maybe there's a move in oil. I've been watching the USO, and that's been going higher. So you saw the breakout through this low base here around 34, 35, and running higher. So I mean, to me, that's been one of the things I've been watching that has made me enamored a little bit or interested a little bit in these names like U.S. Silica Holdings and BCEI, Bonanza Creek. You got to admit that's a great name for an oil company. So I wonder if there is actually a Bonanza Creek. We'll have to find out. COG is another name. Someone's asking about Cabot Oil. That's another oil. These things move higher, and as you notice, there's a base on base. So it brings up the potential for breakout and a move higher. They're still volatile and they're squirrely, and for the most part, Dr. K and I haven't really been big fans of oils during our career, and we like to talk about that all the time, which means they're probably going to go higher here. Do you like oils, Dr. K?
Not yet.
Okay, buy them. So
That might be not yet with an asterisk of could be a few years or longer.
Right. I think you'll see. I know it's Tesla pushing over 120 now. I think you'll see some of these names, the SLCA and the BCI. I think you'll see them move higher. We'll see. Some of that says
IGT. The individual technologies. If there's a breaking technology like fracking, something that's been around but then recognized, and it shows the price volume action, then yeah, let's get on board. But oils in general have always been kind of a bit slow and sluggish and sloppy.
Right. So you're all over Silica Holdings then?
I like SLCA.
Yeah, I mean, that stock's been basing a long time. Maybe it's time for it to get off its butt and do something. So we'll see. We own a little bit of it. So IGT, someone's asking, is that still viable? I don't know. The stock went straight up to new highs, so it's pulling right back to the top of this cup thing it's been in. I don't know if it's a double bottom. It's kind of a narrow pattern. You can see this. You might call that a double bottom. So you broke out to here. So, it could pull back, I suppose, somewhere in here down to the 10-day. And is it viable? I think that's an interesting question because I wouldn't really look at it as being viable. It's already proven that it can go higher. So because it did break out to all-time highs. It's viable. Is it viable here on the pullback? Maybe, but I've been watching this name for a while too. I know some of these names, and you have, IGT. You had this. What's Bally? BY? Is that right? No, what's BYI? Yeah, there we go. Bally Technologies launched, and I think they were buying. What was that company they were buying, Dr. K? Do you remember? Not Shutterfly. What am I thinking?
Bally. Yeah, I'd have to take a look at the news to refresh.
It was another gambling type name.
Right.
Clearwater. Let's go back to some oils. Clearwater, another situation here, and it's breaking out. OAS, Oasis Petroleum, another one setting up. So you can see that the whole group here is sort of broadly basing, and some of them are breaking out.
Yeah, I think they merged with Shuffle, what used to be Shuffle Master, and then they switched to Shuffle Entertainment.
Yeah, that's it. EVR, that's a banker. I think this looks okay. I mean, it's just setting up. Make it a little smaller so I can see the total price action. Whoops. I mean, it looks okay. It's a little squirrely stock, so it's not really my favorite one. I think if you want to buy these brokers, finance investment brokers, Blackstone Group had a pocket, or not a pocket pivot, but a viable gap up yesterday. So, that looks okay to me. And we bought some of that yesterday, and it's up again today. It kind of ignored the sell-off today, so that's looking good. There's the other one, BlackRock, that's been a leader. You kind of had a pocket pivot yesterday, I guess, off the 50-day moving average, just backing up a little bit, but that might be okay too. Solar stocks. Well, they were hot for a little bit. They had a nice move, and you notice First Solar pulling back to its 10-day moving average, but it's below the 50-day moving average. After having these pocket pits, that looks like it might try to hold. The question is, I would want to see some strength going into earnings. I think in a couple of weeks or next week. When is that happening? Looks like beginning of August. So it looks like a little pullback. It held the low of the day. Maybe you could buy a little here and see if the thing launches back to the upside. Solar City, same situation here, but you notice on Solar City, you might notice First Solar is also holding the 20-day line. Solar City, though, pulling back to the 20-day line here. It's right on top of this little area. So, the pullback looks kind of normal. I don't know. I'm trying to decide whether I want to own any of these things going into earnings over the next couple of weeks. So, all that's to say I'm still constructive on the group. Spewer, SunPower is your leader. It's run up and now it's pulled back to the 10-day moving average. Maybe it needs to hang out here for a little bit. So let's see, what else we got? COP, someone's asking about, didn't form a handle. No, it didn't. It just moved out to new highs. So that's a little risky to buy it up here. We talked about Celgene. It's a squirrely stock. It's back and forth after the gap up. I don't know if you gave a little porosity here or what. It held the 10-day line. But it's it's holding up okay. The question is, it's going into earnings. You want to hold it into earnings. Align Technology got a gap up here. It's red because it opened higher and it's coming down. I don't know. Is that a viable gap up, Dr. K?
That would be on earnings here.
Okay.
So it undoes what it did many months ago when it gapped down.
Yeah.
Earnings and sales are pretty anemic on this one, and institutional sponsorship's been declining. So
right.
There's a little bit more risk in this kind of name.
Let's see. SLM Corp, that's a consumer loan company. Decent earnings, 92% earnings growth. So you had a gap up that looks like it might be viable. What's your take on that one, Dr. K?
SLM, yeah, it had good earnings, gapped up as a result yesterday, and the earnings have reaccelerated. So
Okay.
yeah, I mean it's not a bad one here. I think it's possible. It's a possibility. It's not my favorite one.
Yeah.
It's not the fastest name out there, but overall it is actionable.
Yeah, and you're seeing strength in financial names. These brokers here, BX, BLK, trying to round up bases. JP Morgan trying to move out here. Goldman Sachs came out with earnings, but it's holding up, and it's reversed back above the reversal of 4 days ago on Tuesday. So, the group is decent. Also, you've been seeing the mortgage servicing stocks come around. I noticed this is kind of a funky double bottom. NSM had a pocket pivot sort of breakout here. It's a little extended from the 50-day moving average here 3 days ago, but it is holding that. And here we come up to the highs. So that's acting well. And Auckland Financial has also been acting pretty well. And it's hovering along its 10-day moving average. You might watch for a pocket pivot there if you're interested in the stock. So I think those look okay. New Skin had a viable gap up, went tight sideways for 5 days, and there was some news about somebody in China or somebody buying or allowing them to sell their products. So that's actually been acting well, but it's extended now, so you don't really want to be buying it here. PKG. Well, we've talked about this one before. Nothing really, happening here other than this pocket pivot breakout, and it looks like another pocket pivot off the 10-day. So it's acting, well. It's just one of these slow, packaging stocks. I guess I just can't get excited about them. I want a Tesla. Paper and paper products is okay. That's exciting. Unless maybe if they came up with a paper car powered by batteries or something. I don't know. Maybe that may make it more exciting. Someone says, it seems strange that Goog gapped down after hours on earnings and almost back up today. Do you see volume today as constructive or just a dead cat bounce? I actually think it's constructive, and they're probably going to just shake you out and run the thing higher. Google is a big name in this market, and you see this action frequently, breakdowns in leading stocks, and they come right back, and it's just kind of interesting to see. But like Dr. K says, ever the QE market, and now you're down $12. And what were you down here, like 860 something this morning? What was
Yeah,
the
it's
low
all the way down to
after
860 just
hours?
about.
Yeah, so
And
you're like
that's why it's very
872.
difficult to, or it's sometimes not a good idea to trade after the close or before the open, unless it's something liquid. And if it's an ETF, and that kind of instrument's a different story altogether. But when it comes to an an emotional reaction given by the market after a company reports, the
Yeah,
company can swing to extremes.
right. So I don't see it as a dead cat bounce, unless it reverses and closes down, and you notice you found support just above the 65-day exponential. That's the black line. So it's not really the end of the world here. IPAR, boy, that's one. What is that? Is that a golf stock? You remember the golf stocks? When was it? I think 95. You had Callaway, or 91 was Callaway, and
Yeah,
you
there's
had
some great ones in
a
the
couple
early
others,
90s.
Cobra Golf, and those are, Callaway was a great stock. I remember when I was at Merrill Lynch, brokers, we used to fight over getting allocations of the stock on the IPO when it came out, because it was a great stock to cold call with. You call up most executives and guys who, mostly men, I have to admit, who play golf. It was an easy sell. You could open an account, calling up and say, "Look, I can get you 100 shares of Callaway Golf if you open an account with me." And there was a great way to open accounts. But all the brokers would fight over who's going to get allocations, and if you got 100 shares, you were lucky. So I remember Snapple, when that one came out. That was another one like that, and that was an easy sell too. I think I got a total of 500 shares allocated to me that I could give to my best and least pain in the butt clients. Flowers Foods. I don't know. I can't get excited about foods, but stocks just kind of, it's really volatile, so it's hard to say what's going on here. I'm not so sure. It's the one I want to own. It's kind of like PKG, Flowers Foods. Okay, that's exciting. Stocks had a nice move though, so just the basics a little funky. You got this big volume here, so it just seems a little slow. I think I think there are better names probably that you could be playing in this market. Let's see. Gil, how did you discover the significance of the 65-day exponential moving average? I just noticed, well, the first thing is I know a lot of people, commodities guys, like to use the 65-day exponential. So that was, so therefore I knew that there are a lot of people who looked at it. And then I noticed that you do find some stocks that hold that. They violate the 50-day, like Flowers Foods, but yet they hold the 65-day and exponential. And I'm not sure why that happens. Maybe because there are a lot of people who use that, and so I just put it on charts. But it seems to me that it just seems to work when you're looking at charts. So someone's asking, Gimo, is that enough volume for you? Well, it's trading pretty light volume right now. It's hard to figure out what the average daily volume is on this thing. I think it's probably about, I'm going to guess that when it finally does trade for 50 days, it's going to be I'm going to guess 400 to 500,000 shares a day. So see if I'm right on that. How many more days you got to go? How long has it been trading? 1, 2, 3, 4, 5, 10, maybe 20, because it's got another 25 days or so to go before you know for sure what the average daily volume is on a 50-day moving average basis. So somebody says the loneliest guy on the planet is a salesman at a Microsoft Surface store. Yeah, tell me about it. Let's see. On Organovo Holdings, isn't this this company that can print? They can print organs. Yeah, I mean this.
Yeah,
I guess it's starting
they
to
got a
move.
bioprinting technology. So another
Okay.
one of these three-dimensional printing companies, but along the biological lines.
That would be cool. So maybe you could print me a new brain.
Huh.
It's extended, so it's not really something you can buy anywhere up here. But I like that. I've always liked. I know about this company. I've always loved the technology. I think it's very compelling. And I guess where you would see it start to become more popular is if it got above $10 a share, when you would see more institutions get excited about it. So that's probably where where I'd like to see a form a base or something, and something happens there. I think right now, though, they're still, yeah, still losing money. Sales were up 83%. They did 200,000 in sales. Whoa, look out, 200,000 in sales. So it's still kind of premature or early in the situation. LITB, Light in the Box Holdings. Isn't this a Chinese company? It's a retailer, internet retailer, and yeah, out of Hong Kong. So another Chinese stock. Earnings supposed to be jacking up to 35 cents this year, and 68 cents next year. So holding up in a little cup-like formation. It's kind of deep, but I guess you've got, I don't know, I guess you'd call this a pocket pivot. It's close to the 10-day. What do you call that, Dr. K? Is that a pocket pivot?
Well, yeah, that would be a pocket pivot, and it's looks to me like, I mean, the problem with this one is it's Chinese stock that's a little on the thin side. It's an IPO. It's just turned into positive earnings, and the estimates are very big, but still, that it just turned positive. There's a lot of caveats, risks involved in this kind of name.
Right.
And also that it's involved in online retail, and that's a very competitive space.
Right.
Even over in China. So I think there's a lot of problems with this company that I would probably shy away from it for now, unless it really started to show some serious price momentum.
Netflix, I mean, there's really not too much to think about. You had a couple of pocket pivots as it was rounding at the base. I think in this market it's very important to get on board or try to get on board when you see these roundabout pocket pivots. You had a valid breakout from a cup formation, and it's holding up. So there's really nothing to think about, and it's holding up on a day when the market's coming off, and you had a big gap down in Google, but didn't seem to affect Netflix. LinkedIn not bouncing after the gap down this morning. Well, I think you got to give it a little time. It's just hanging out, so maybe you'll see it get some support. But you can use, if you didn't buy the breakout yesterday, which probably half of you didn't today, but pulling in like that, that's where it becomes viable. Then the question becomes, do you want to hold the thing going into earnings? So somebody says Goldman Sachs and Swedish Sachs, SAX means scissors. Interesting. Well, they were trying to cut loose on Tesla the other day, and so far not working. Let's see. Anyways, got more questions here. I think we kind of covered everything I'm looking at. Someone notes that the Russell is hanging in there. I think that's, I think we put out this morning in our pre-market pulse that the big stock NASDAQ names are having trouble, but for the most part, the smaller names seem to be acting okay. So that's kind of been where the strength is. Someone's asking also, do you trust any Chinese ADR after the frauds a few years back? I have to admit I don't. And it's one of the reasons why I haven't gotten excited about, whoops, what did I do here? About why. Although that stock's had a heck of a move. So I guess if you're in there and you're nimble and you get the move and you blow it out, you'll do well. But yeah, what was that one, Dr. K, that was, they broke apart, it was looking good, it was like a 16, 17 stock.
You'll have to be more specific since so many stocks have done that in this, the last year.
I'm leery of these things. So yeah, let's see. Dr. K, do you see much upside in the financials ETFs from here, such as FAS?
Well, XLF, the 1X ETF, has shown the most strength of these ETFs. So strength begets strength, and it's telling us that, and we're in an uptrend as well. So go with the trend and. I would be on the side of favoring any ETF that's showing pronounced sustained strength.
Okay.
So XLF would be in that category because you compare that to say QQQ, which is quite a bit weaker. SPY is about that's on the same level as QQQ. Yeah, I mean, so these major ETFs that mirror the major averages are generally, generally have relative strengths in the 50s in this kind of environment, but XLF has a relative strength of 74.
Okay, we got a few more minutes here. Any more questions? Let's see. EWG. That's Germany. You like this one, Dr. K? Since this is your part of the world.
Yeah, well, not any more than I like any of the other European ETFs. You got IEV, you got EWU. I mean, they're all kind of doing the same thing. And so, if we believe that the markets are in uptrends, which they are so far, I would rather stick with the markets that are showing more strength, and that would be the U.S. markets. I mean, as an example, EWU, which mirrors the British markets, has a relative strength of 44. IEV, which is a basket of European markets, has a relative strength of 45. So that's considerably less than QQQ or SPY, which have relative strengths in the mid 50s. And the German one, that relative strength also is in the 40s. So Europe in general is lagging the U.S. in terms of strength.
Interparfums, yeah, we were talking about it's a cosmetic company, but you have a breakout here. It's pulling back to the 10-day line, relatively thin, so not something I would want to play myself. Somebody's asking, how invested are you? That's kind of irrelevant, because I could be 200% in on a single stock, looking to trade it hard for a couple days and then be back out. So I don't operate on the basis of some modern portfolio theory idea that I'm going to be 50% weighted in stocks and then 60 in the 7, whatever. So it's kind of an irrelevant question, and I think people should know that by now. Cat is Chanos, the guy who was on CNBC the other day killing Cat. Have a basis for shorting Cat that is believable. Well, he thinks the boom in commodity stocks or the commodities is over, and so that's going to affect these companies. And you got Joy, I think, is another one, and they're not doing so well. I mean, I would say that for the most part, these stocks are in pretty ugly downtrends. And you look at Joy, for example, that's been pretty ugly for a while. Cat, not looking so hot, down to the 50 days. So, I don't know. I was on the chat room the other day saying that Cat could be shortable here. It would be a short-term tactical type short, and then the next day went a little higher and broke down on this guy being on TV, talking down the stock. Somebody asks, is CF a short? It might be, or it might be trying to form the lows of the base. So I think it really depends on what the market does. If the market is able to launch higher, you may see more stocks turn around. But if indeed the bull market in commodities is over, or you've seen some of these others, like Monsanto has had some problems. Look at some of these other fertilizers. The whole group, Agrium, Potash, they're all pretty ugly. But they're kind of down there, and they've come down a way, so I'm not so sure that you necessarily want to be shorting these things willy-nilly. Could be a problem. Let's see. Somebody says, Gil, at times you say that you go in and test stock with a small position to see how it behaves. Since you trade large lots, are you trying to get a feel how fast they fill your orders, get a feel for the sellers? No, I'm not really looking at how fast they fill my orders. I usually will play with liquid stocks, and it's easier to get an order filled with a liquid stock than a non-liquid stock. And remember, there's also algos out there, and when you start to take stock and you start to take out a couple of offers, the algos will just start to run away, and so you'll see the supply kind of move away from you there if you get too aggressive. So it's not really something you can gauge these days as well as you could in the past. So to me, testing is like sometimes I make a short something before I turn around and go long. And that's what I'm talking about. If you go back and read Livermore's Reminiscences of a Stock Operator, if you go back and read How to Trade in Stocks, it's another book by Livermore, and he talks about instances where he was short a stock or long a stock and realized that the trend was shifting. I think one of the famous examples from Reminiscences of a Stock Operator was, I think, in 1907, when the market broke down, but you had Anaconda Copper, which is a big name back then. It's one I love to talk about. And he was using his century mark rule to buy it going, I think, to the 300 level. And so he was long the stock, but he was being long, and he realized that it wasn't really doing what it was supposed to do, so he flipped and went short. So that's that's kind of how what I do too, but that's just because of the way I trade. I operate on a visceral level, and I need to kind of feel things out. I mean, some people may not, be oriented that way. Based on price volume action today in the indices, would you expect to see more distribution early next week? I don't know. Who knows? Are we trading heavy volume this morning? 57% higher on the NYSE, but you're not blowing apart, so it's really like they're coming into the NYSE stocks, it seems like. NASDAQ up 10%. That's probably mostly due to Google and some of the other names. So,
Yeah, it almost looks like the market's trying to gain traction with the S&P. So if you get volume there, that's a good sign.
Right. Oh, the volume. You know what? The volume is
down because of the majors like Google and Intel.
But you also have options expiration, Dr. K. So that's another reason for it all.
Yeah. Well, yeah. Of course, that's going to distort everything out.
So I don't think that you can really tell for sure. Dr. K, are there any currency or country ETFs that you see with nice, noticeable uptrend potential for the next 6 months?
I don't really do things with currencies because there's so many cross currents with them, and it's not something I've really made a concerted study of. So I wouldn't make any recommendations as concerns investment in currencies. I mean, there's some broad brushstrokes you could say, such as countries that are increasing their personal and economic rights for its citizens. That usually bodes well for the economy and therefore the currency. Also, countries that are deep in hard assets, commodities, namely, like you got Australia and you got Brazil, and so those currencies have benefited from being awash in a myriad of commodities. Meanwhile, the debtor nations, you've got the euro, the pound, and the dollar. In the short, you can have short-term strength in these vehicles, but there's so many cross currents, and I think the long-term trend is going to be down for all these currencies as long as the central banks in these countries continue to print.
I like this question. How excited are you all about this rally? You all don't sound too enthusiastic. Well, like I said at the beginning, I'm a little bit under the weather, and but I don't know how enthusiastic am I supposed to sound. So I'm not I don't really consider myself an investment pitch man. So maybe try Jim Cramer for that. But I'm also not bipolar, so maybe I don't always come across as being enthusiastic. I think on a day like today, you're trying to be objective and look at what's happening and really not get excited one way or the other. And so I think not getting excited is a better way to operate than getting excited, whatever day it happens to be. So whatever the market's doing. So Dr. K.
Yeah, I remember the first quarter of the year 2000, and the markets just kept sailing on higher, and everyone was getting excited, or more and more excited. Where you get everyone getting involved in the markets. But I remember my reaction was one of growing concern because, like I said many times before, I need to know why I'm making or losing money. And in that first quarter of 2000, I stopped knowing why I was making money. So even though I was making money and doing very well, I had great concern, greater than I'd had in many years, simply because I felt like I lost touch with my own trading accounts, including the firm account. Just didn't make sense to me anymore. But I was going with the trends, so that's fine. You stick with the trends. But yeah, March of 2000, I wasn't all that surprised or shocked when things started to finally blow apart.
Somebody asks, does Tesla still look like GM in 1915? Well, the only way it looks like GM is it had a big move, initial big move, and then it went sideways. GM went sideways for several months and then broke out again. So the theory there is maybe Tesla at some point is going to have to go into a base and then break out again, and maybe that's when you have the big move. So it's it's just not a comparison, but it doesn't mean it's apples to apples, and that it has to still look like GM in 1915. Amberella, is it still a buy on this pullback? I guess if you like the pocket pivot, the pullback's orderly. I guess you could try and buy on the pullback. I mean, I don't think things change really day to day, but you already know that it's the nature of this stock to run up and pull back, and it does that frequently. So that's one of the reasons I don't like it. And probably if I bought it here, I would have traded out of it. I think I did that with ACAD. What's that doing? So it's kind of hovering around here, but buying it along here, and then it runs up and sell it and see what it does. But they got to go into earnings. So some of these smaller stocks, I'm more inclined, if I get a 7, 8, 9, 10% move, and I just blow it out and take profits. Do you have that same feel now as you did in 2000? I'm not sure what that question means. Do we still feel about the market like we did in 2000? It's a much different market. Do we operate the same way? I would say not exactly in this environment. Most of you who've been on the chat room know that I've been far more active as trading in and out of names and selling into moves to the upside. So someone asked if oil refiners are done now. They don't seem to be. What's the other one? Valero is another one. They're not looking so hot. But I don't see oil refining as being the same as the oils themselves. But I think they've been done for a while because they violated their 50-day moving averages a long time ago. Last question, I think, before we sign off. Dr. K, how much porosity would you give a thin stock like OSTK's viable gap up? So in other words, if it drops below this low of 31.62, how much downside would you give it?
Not a whole lot, simply because if you look at where the stock is traded, that's a pretty big range on the day, and then closes near the peak, and now it's retracing the gain. So in this case, I would probably only give the stock at most 2% porosity, but keep it in context with the market, because if the general market's weak, then I would give this probably 2% porosity, and if the general market is strong on that day, I would probably give it 1%. So always keep everything in context.
Okay. So that's pretty much the message for today. Is you got to pull back based on Google News, but Google's trying to rally back. And what was the other one? iSurge Intuitive Surgical was already toast a long time ago, so that's not surprising. It's already a weak stock, but Google is showing some metal as a leader by getting some support off the lows. We'll see if that holds. I think that's going to be critical for the stock and possibly for the market. One more, Splunk. Nothing really to think. You have pocket pivots along the lows here and here, and then here again, and it's moving up and holding the 10-day. So it looks okay. Nothing wrong there. Anyways, that's all I've got. Dr. K, you got anything to add?
Nope, all good on this side.
All right, so that's all we got, you guys. Thanks for showing up. Hope it was helpful. Some of the stuff we're looking at, and it helps you on a day where maybe people want to get scared because they see the NASDAQ getting hammered, but the NYSE-based indexes are probably showing some positive divergence here, and that they're not also getting hammered and confirming the weakness. So that may be a good sign for the market. And remember, you are in a position to pull back. Nobody worries about when the market's running up. Everybody just worries on the first pullback, and they want to get concerned. So don't get concerned. Just stick to your rules and be opportunistic. That's what I say. All right. Catch you next time, you guys. Thanks for showing up. Take care.
So long, everyone.